US regulators are taking a long, hard look at the potential regulation of FX derivatives, and I asked Marco Baggioli from BNP Paribas about the current state of affairs.
On the trading front, the most important thing to keep in mind is that Dodd-Frank is bringing in an element of disclosure for the whoever trades and invests in any derivative, whereby single bank platforms pretty much are not going to be compliant with that, in the sense that it's still to be clarified, but there should be at least 5 different prices available to anybody who trades. So single bank platform, of course, only stream the bank pricing. They will have to either aggregate other people pricing or pretty much not be compliant or restrict their utilization to certain clients, but not everybody, or at least not in the States. The European side is not very clear on this yet, but is most likely to follow what happens in the States. On the post-trade side, on the clearing side, we see that we will have some products that will be centrally cleared. This product should be technically all swaps, options, at least the vanilla side of it. We have been asking, as an industry, whether FX swaps will be included in the new environment. We have been waiting for months now to hear about it, and apparently it's going to happen sometime in July, just before the Dodd-Frank Act will becoming effective on the 16th of July.
Was that FX swaps maybe aren't familiar to most traders? Is it an industry and financial instrument that's getting more popular?
If you look at volume, of course, the spot is huge, but swaps, both outright and forwards, and options are growing dramatically in volumes with investors and users. It caters to a different type of users than what probably the Dukascopy type of clients typically do today. But I understand even Dukascopy may move into that space for relatively soon, right? So, yeah, it's a large section of the market.
The derivatives didn't come out of the financial crisis particularly well. They were blamed for a lot of the problems. Do you think there's a realistic chance that the FX swaps can be left out of it?
Well, the thing is, it seems like the US Treasury and the other involved parties are seriously considering an exemption, and the latest in between the lines messages would point in that direction. What is interesting to see is whether Europe will follow, or because Europe has been strongly saying that they are part of the clearing environment, therefore the Commission may diverge from the US on this. We will see whether, if the US were to exempt them, whether the Commission will also exempt them. Otherwise, you run the risk of running a regulatory arbitrage between locations. Asia, of course, is waiting to see how the Western world is going to make it easier for them to grab market share and bring more trading to them. I don't think Asia will become more aggressive in the sense of offering an environment which is greatly unregulated, because it will not play in their favor in terms of reputation, etc. But definitely they can get an upper end if Europe and the US become too complex.
Practically speaking, is it possible to have 3 separate markets where there's different rules in each?
But that's the thing about the whole conversation with the regulators on a global basis has been, FX is a global market. It's a very liquid market. It's a very transparent market the way it is. CLS is already a clearing system that covers the vast majority of the market anyway. 17 of the most traded currencies anyway clear in CLS, therefore taking away the settlement risk for most players. Do we really need that? We as an industry think we don't. However, we appreciate the regulators' point of view that, of course, look at what happened 3 years ago and go like, okay, maybe we need to take control of this, and the derivative is a derivative, therefore they need to be regulated. And of course, FX, apart from the spot side, we are talking about derivatives. So naturally they should be part of that set of rules. Whether it makes sense, whether it will, let's say, decrease risk rather than increment risk, whether it will create jobs rather than destroy jobs, whether it will increase liquidity rather than decrease liquidity, we all have different opinions.
Interviews and reaction from the Geneva Forex event are available here on Dukascopy TV as well as on YouTube. Goodbye for now.